Welcome back to the Own It podcast. My name's Dion, and in today's episode, we have David back, now a regular guest on that podcast.
Back again.
Back again. I think you're going to be on for a couple of episodes.
No, that's all right. Looking forward to it.
Hopefully everyone likes you.
Yeah, no. You're going to hear from me a lot.
As well, the setup's changed a little bit since you were here. You were on that couch over there last time. Now
Yep.
we actually have lights and stuff. It's forever improving.
No, feels a lot more professional than it did the last time, but info is still going to be...
Just
Actually, no,
good.
the information is going to be better.
Yeah, there we go. Good. Not that the information last time was bad.
Yeah, no, listen to that one too. Yeah.
Today's one's going to be super relevant. I try to make this podcast sort of evergreen, but this one's going to be very relevant for right now, which is the 2025 home guarantee scheme, which is, and we'll talk about this, was Jan 2026.
Mm-hmm.
Now it's October. Things have changed and so many people have questions. Like I've seen so many videos online. Everyone's talking about it. Thought we would just give like a 101. What does this mean for everyone? Because it's super relevant at the moment and people sort of do need to know. Sort of probably starting from the basics for those who don't know what it was even when it was scheduled for January. Like what is sort of the general, what's the general sort of explanation of what the scheme is?
Yeah. So the scheme itself has been around for many years now, where essentially it was like a parental guarantee, but instead of your parents' property, the government was providing security for first home buyers to be able to buy a property.
Which is a good thing too, by the way. So it sort of evens out the playing field. Yeah,
it's a great thing. And it's not the scheme or the program where the government takes ownership in the property.
Yeah.
A lot of people get confused with that, the Help to Buy scheme.
Yeah.
This is where they just guarantee the property, secure it for you as well. That way you're not paying lender's mortgage insurance. You're saving a $20,000, $30,000 cost just on that, depending on your deposit, right? So currently, there's limitations on who can access this scheme. You need to have a 5% deposit genuinely saved, and you need to have your single income below $125,000 as noted on your notice of assessment, or a dual income below $200,000 as noted on your notice of assessment. The major changes that they made, the biggest one I think, is that they're removing the income caps for October 1st.
Yeah.
Like we said, it was originally going to be January 1st. Now they've brought it forward to October, which just opens up the scheme for everyone. And you can argue whether that's good or that's bad for everyone, but it's great for competition. It's great to get people to spend again.
Yeah.
And I think as well, there were people that were getting penalized for earning too much.
Yeah, exactly right. And I think a lot of people get themselves stuck in that renting cycle where they might be on really good incomes, but they're also renting. And then, they could afford a mortgage, but they can never save it. So this sort of helps them out. They're also taking away the amount of, originally there was a limited amount of spots on it. Now they're saying unlimited.
Unlimited.
What does that mean? Like, is that going to affect much? Were the spots originally getting filled?
There was only a sort of a time where I remember where they got filled up pretty quickly when there was less than what there is now. Right now there's 35,000 places per financial year. That's getting obviously scrapped. There was a stage where they were getting filled up, but they were at a lower limit of around, I think it was 15,000 if I'm remembering correctly. But now, 35,000 places, they weren't filling up at all. Like
that doesn't
all the
really
banks
change
had them.
anything.
It doesn't really change anything. But rolling in the regional home guarantee is a big change though as well.
So let's talk about that then as well. What's that as a bit of an overview for someone who's looking regional? How does that affect them?
So it was one of those new changes, right? So only the past 2 financial years we had the regional home guarantee, which essentially meant that someone from Metro Melbourne couldn't just decide, I want to buy in Shepparton because I feel like it, right? And just I'm going to move up there and use the regional home guarantee and buy a property that's of a lesser value, blah, 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 all that kind of stuff. You needed to be eligible on certain criteria. You can only move within a few suburbs of where you currently live if you're in the regional guarantee. And that was, constricting that market a little bit. Now they're rolling it all in together. I actually have a couple clients that were looking at moving regional. And now that it's all going to roll in on the 1st of October, they're able to do that because they want to move out of Metro Melbourne, right? They were just restricting those people. Is it a big change? I don't know. They might get people moving out of the city more, encouraging people to go in the outer skirts of Melbourne. But
I was going to say, it's not necessarily a bad thing because obviously Melbourne's so overpopulated. That's half our problem with Melbourne, and Metro Melbourne is so big. You could drive 2 hours in one direction from Melbourne CBD and you're still in Melbourne Metro.
Mm-hmm.
Like it's actually crazy. So it might not necessarily be a bad thing to get people to move to regional areas, but it could be sort of a negative thing on local buyers in those areas if they're getting priced out from Melbourne-based buyers. Yeah.
Well, the thing with the regional guarantee is that those property price caps, at least in Melbourne, didn't change.
Yeah.
650 beforehand, 650 now.
Yeah.
The massive change though, or the other massive change other than removing the income caps was increasing the property price cap.
Yeah.
So in Melbourne, 950. So it's actually representative of the median house price.
Because it's probably fair. Like, I can't think of many things that sort of sell, like, I mean, apartments and units, but, you know, for all those buyers that sort of want that small 3-bedroom house, which some do still exist sub 1 million, they couldn't access that scheme beforehand. It was just really units and apartments. So it's a thing. Yeah.
It was previously capped at 800 in Victoria.
Yep.
Like you can still buy something pretty decent for 800,000. But now that they're removing the income caps, of course, you need to open up the property price caps as well.
Yeah.
That way you're not flooding everyone in that one little segment of the market.
Yeah.
So, I mean, Sydney's gone up to 1.5 million,
Yeah.
right? 5% deposit.
That's
plus
a
your
one.
costs.
That's a 1-bedroom apartment up there.
Yeah, 1-bedroom apartment overlooking the harbour is you might not even qualify.
I'm currently jumping into today's episode just to ask a massive favor. If you could please leave us a review on Spotify, Apple Podcasts, or whatever platform you're listening to this podcast on, we would greatly appreciate it. Now, back to today's episode. I was going to say, so income caps, that's really the main talking point, I think, or the big change for it all, minus the date getting shifted. What does that mean for people? Like, I think a couple of people I've spoken to, I think their biggest fear is all of a sudden that's going to really sort of add a whole lot of, you know, new buyers into the marketplace that previously weren't there. Do you reckon it's going to be as big as people are sort of making out to be, or?
I think it will be, not on the fact that they've opened it up to more people. I think it will because the media around it has been massive. Huge. I've had videos that have gone pretty well on social media platforms about this guarantee. And a lot of people are inquiring about it because it's something that they're like, oh, okay, maybe I do qualify. When you hear something with a whole bunch of, you know, limitations to it, you think, oh, maybe I'm not going to qualify. I'm not going to bother. It's easy to scroll past.
Yeah.
Now, everyone's eligible. And, you know, with the first home guarantee, let's not forget, you don't necessarily have to be a first home buyer. You just kind of own property in the last 10 years.
Yeah.
So I have someone at the moment I'm dealing with. He owned his last property 12 years ago.
Yeah.
Previously didn't qualify for the first home guarantee because he earned too much over the income cap. And here we are.
Yeah.
So he's not necessarily a first home buyer. But that's brought him into the fold.
Interesting. I think a lot of it also comes from, there's obviously a lot of talk about it. I've had a lot of people reach out and book meetings in the last 2 weeks because of it, or with the same sort of idea that I want to buy before the 1st of October because I'm really concerned about what could happen post. I wonder if most of the interest that this will generate will actually be before the 1st of October because it's so crammed in a short amount of time that everyone's rushing and everyone's trying to buy. And I think buyers will sort of overpay, sort of going, I need to buy now, sort of creates more like a bubble in a way, which will probably balance out post 1st of October. This isn't financial advice, but sort of like, I just know there's so many buyers that are trying to get ahead of that. And I wonder if that's also sort of going to create a bit of a sort of a bit of a spark in the market.
There is definitely a spark because people aren't informed.
Yeah.
So for instance, my client that earns over the income cap, he can buy tomorrow. That's fine. And he'll be eligible for the scheme provided we don't actually lodge his loan application until after the 1st of October.
Okay.
So it's not dependent on purchase date. It's dependent on loan lodgement date.
So let's say you purchase on a 120-day settlement.
Yep.
Just hold off when you finance applying until post 1st of October.
Yep.
So like you probably want to have a backup plan. Like you want to
essentially this. So we had a meeting with one of the major banks just yesterday, and their advice was if you have someone that's wanting to purchase, if you must do this, they don't want it obviously because it double handles work for them and it double handles work for me too. But if you have someone that must purchase and needs to go unconditional because they have a finance clause, or get it approved with lender's mortgage insurance involved. And then after the 1st of October, say, hey, can we roll this back and get it on the home guarantee scheme? And they'll do it.
Yeah.
So there's ways around it. People are rushing because they're not informed.
Yeah.
Right. And I think, you know, it's a herd mentality. People are just rushing together.
Yeah.
Because that's what we do.
Yeah, spot on. I mean, I think from a broader perspective, buyers running around with 5% deposits, and like I feel like for me, I'm always like, oh, that's like quite a large, it's a 95% leverage rate. What are the risks associated? Is that necessarily a good thing? Like, should people be buying with a 5% deposit?
I don't love it.
Yeah.
But I understand why.
Yeah.
Because if you're going to buy for $800,000, you need to come up with your $40,000 deposit. And in Victoria, you need to come up with your stamp duty too, which is $40,000 at that range, right? It's a lot of money you need to come up with on the spot. That's 85,000. That's 10% deposit.
Yeah.
They've saved the money and shown that they can save that money. Why can't they access it? Because our stamp duty concessions is another talking point that haven't been touched.
It actually is ridiculous.
It's crazy.
Yeah. Like what is selling under 600,000 for like to pay no stamp duty? Like again, and this is what frustrates me. It's all sort of like high rise apartments and whatnot. So, and I've spoken about this so many times on like my social media that it sort of incentivizes buyers to make a bad decision. Yeah, like it's frustrating.
It is super frustrating. Like I have clients that say, "Oh, I don't want to purchase over 600,000 because I don't want to pay stamp duty." Well, if you really looked at it, if you're buying at 650,000, your stamp duty is like $6,000 because it's a sliding scale and no one knows that. They just think, "Oh, over 600, I'm paying full stamp duty." And again, we're not buying anything good under 600,000 with no stamp duty. They need to raise that there, but we're in a state that needs to raise money. So, I mean, it's not a political podcast, so I'm not going to get into that, but it's just something I don't think is going to change. So keep saving your money.
Yeah. What do you think some potential like mistakes buyers might make? And obviously you mentioned one as well, like you might not be aware that you can actually buy today and still access it in a little bit over a month's time. What are some other mistakes that buyers might be making at the moment when it comes to this 5% first home buyer scheme?
I think the biggest mistake, and it's going to sound like I'm tooting my own horn here, but it's not talking to someone earlier.
Yeah.
You don't know what you don't know.
Yeah.
You know, I've got a client that rang me yesterday. She's leaving for Europe on Sunday.
Mm-hmm.
She said, "Hey, I just want to sort of understand where I stand because when I get back, I want to sort of get this started." Had a look at everything, explained what we needed to get done in that time. I basically just said, "Don't blow your deposit in Europe." And she's in the right zone to be able to buy a property pretty much straight away when she gets back. The biggest mistake is just not reaching out and actually taking the first step. Taking the first step is the one thing that not a lot of people do. Once you do, the world opens up.
Yeah.
That's my number one mistake. It's just not taking action, even if you're not going to do it.
Yeah. I feel like that will hopefully give a whole bunch of information to people sort of considering the scheme. Obviously very topical at the moment. I think it also just balances a lot more people's decisions. Like you don't necessarily have to rush into it or you don't have to necessarily wait. There's more options out there. But just like anything, I always say this to people, like don't buy the wrong property at the right time. Like don't force your purchase now just because you feel like you have to. You're better off buying the right property at the wrong time. If the market moves 5%, it moves 5%. That's still cheaper than having to go and sell your place and buy another one. So yeah, be patient, but also don't be too optimistic where you're never going to buy.
No, for sure. And I think with all the news we're seeing as well, you know, if we're heavily focusing on Melbourne here, because that's where we are, the market is due to move. It's due to start having a bit of uptick soon. And if you time your purchase right, even then timing's not the biggest thing. If you get the right property, like you said, that's what's going to pay dividends.
Spot on. All right, mate. Thank you for coming on. Thank you for giving some really valuable information. I'll see you in 2 more minutes on the next podcast, but everyone else can catch you next week. We're going to talk about buy first, sell first, which order. Even if you're a first home buyer, it is still interesting to hear from like the other side, the vendor side of things, if you're looking to purchase a property. Thank you for listening in. We'd really appreciate any support, including a review. Helps grow the podcast, and we'll catch you in next week's episode.